Hi, everyone. Thanks for joining us. We will get started in just about 30 seconds. I'm just letting everybody join in. All right. Well, welcome, everyone. I'm Cindy Nellis, and I am the director here at Penn West Clearing Small Business Development Center. We're glad that you're here. As many of you are getting your businesses set up and ready to go, we want to make sure you have the basic knowledge of Pennsylvania sales tax. So welcome to Sales Tax Basics. Today, you will learn who needs to be registered to collect sales tax, what items are taxable, when does sales tax need to be charged, where do you file and pay, and how to keep proper records. So you'll also learn about exemptions, use tax, and resources to help you every step of the way as your business grows. I'm very thankful for the partnership with the Pennsylvania Department of Revenue to present these topics. We have a lot of experts joining us today, and so we'll make sure that your questions are answered. The Pennsylvania Small Business Development Center has established a partnership with the Pennsylvania Department of Revenue to deliver monthly webinars that provide key information for business owners. We have 4 webinars, as you can see on our flyer. Each one offered 3 times a year. We offer it every 4 months. Today we are doing sales tax basics, but the other topics are getting started with MyPath, Pennsylvania taxes for new businesses, and withholding basics. So we hope that you plan to join us for next month's topic of withholding basics, and we'll be sure to get out to you a 2024 flyer when we have all of the topics decided on. Before we get started, let me go through just a few reminders for our webinar. Following today's event, you will be receiving all the PowerPoint presentations that you see, a link to today's recording, and our flyer with the registration link for any of the upcoming webinars. If you have a question for our presenters, please enter them in the Q&A, and we will probably be fine with getting all the questions answered today. If you have a question for me, your host, please enter them in the chat box. To get started, also, I want to just give you a quick introduction to the Small Business Development Center. We are part of a national program, America's Small Business Development Center. In Pennsylvania, we're one of 15 centers, and our program's mission is to help businesses start, grow, and prosper. We're here to provide you with education, information, and tools to help you make better business decisions. We primarily spend our time providing one-on-one business consulting services that are at no cost and are confidential. And to us, any small business is a business that's for profit and has less than primarily 500 employees. So there's a lot of businesses out there that we work with. We also provide training. Today is an example of that training. And I give you our statewide website, pasbdc.org, because that does provide you with a listing of the training events that are offered by all 15 centers. We're here to provide you with information throughout our consulting services. We have access to a lot of great resources, both on a local, state, and federal level. And we do a lot of referrals. So we get to know you, get to know your needs, and provide assistance to help them, overcome those needs or challenges, and of course, get you connected with other resources that can help you start and grow your business. So this is our map of the Pennsylvania SBDC network. So take a look at your county, and that will tell you what center or what university hosts the SBDC for your county. Again, for us, it's Penn West University. We cover 10 counties in the Northwest, North Central region. We are also funded federally through the Small Business Administration, and then through the state, through the line item in the governor's budget called PREP, Partnership for Regional Economic Performance. So that's a little bit about us. Again, you can connect with us by just asking for one-on-one business consulting services, and you do that through our link here. We'll be sending that out to you. Check us out. And of course, there's no wrong door. You can always get connected with me, and I will get you connected with the center that covers your area. And certainly you can give me a call if you have any question following today's webinar. So with that, I'd like to introduce you to Stephanie Schreck. She's an analyst with the Customer Outreach Relations and Engagement Division. She's with the Pennsylvania Department of Revenue. So I'm going to stop sharing so that Stephanie can start sharing, and look forward to today. Thank you, Stephanie, for being here. And of course, all of your experts that are with us as well. Okay, I could not hear you, Stephanie.
Yeah, sorry about that.
That's okay.
But thank you, Sydney. So hello and welcome to the New Business Series presented by the PA Department of Revenue. My name is Stephanie Schreck, and I am a research analyst with the core division, which deals with outreach and education for our Customer Experience Center.
Stephanie, we need to see your PowerPoint presentation.
Yep, that's what I'm getting here right now.
Awesome.
Yeah, it just didn't share properly the first time. So
looks great.
Awesome. Thank you. All right. So let me just get into here. See if I can stop sharing. All right. Okay. Am I still in there? I think so.
Yes, it looks great.
Okay. Thank you. All right, so first I want to start by thanking you today for joining us and wanting to learn more about how to properly collect and remit Pennsylvania sales tax. One thing we do want to emphasize in our presentation series, the cost of non-compliance far outweighs the cost of compliance. Okay, so today we are going to go over a wide range of information relating to sales tax and the nuances that go along with it. We will be defining what exactly is sales tax according to the Commonwealth of Pennsylvania and how local sales tax is applied. With that, we will talk about what items are taxable, including tangible personal property, services to tangible personal property, and enumerated services. We will also clarify who must collect PA sales tax, as well as what qualifies as nexus. We will also go over how to register for our license, how to calculate the amount of sales tax to collect, and as well as how to report and pay the Commonwealth. Next, we will quickly go over exemptions and who or what they apply to. And we will also going to highlight use tax and when it needs to be paid. Finally, we will wrap up this module by going over what resources are available to help you should you have any questions or need further assistance. So what is sales tax? Sales tax is a 6% tax on the sales within the Commonwealth of tangible personal property, services to tangible personal property, and certain services. We will talk about each of these points individually, but before we do, let's explain what we mean by a sale within this Commonwealth. When you buy an item at retail and the item is delivered to, used, or consumed in Pennsylvania, then the sale occurred in this Commonwealth. If the business sells and delivers an item outside the state to an outside of the state location, then the sale was not made in Pennsylvania and is not subject to Pennsylvania sales tax. As you can see on the map, Allegheny County shows 7% and Philadelphia shows 8%. This is because of local sales tax. During the 90s, the Pennsylvania legislature passed a new law imposing a local sales and use tax on certain counties. This was a tax imposed in addition to state sales tax in Allegheny County and the city of Philadelphia. The rate in Allegheny County is 1% and Philadelphia is 2%. These taxes are deposited into a fund dedicated to pay for specific needs for those jurisdictions. The rules are the same, except that the local tax is based on the place of the sale, not delivery. For instance, if I buy a meal in Philadelphia, I will be charged a total of 8% state and local sales tax on the meal. If I lived in Montgomery County and ordered furniture from a Philadelphia store, the additional 2% local sales tax will still be added based on the location of the store where I made the purchase. Okay. So now that you're a little bit more familiar with what exactly sales tax is, let's review the individual taxable components. Okay. So tangible typically means something material or physical. Tangible personal property is generally physical property that can be touched, such as furniture, clothing, and vehicles. However, there are items that cannot be felt but are still considered tangible property, such as electronically delivered software. It's distinct from real property or real estate in that it can be moved from one location to another, while real property is permanently attached to a single location. Okay. These are some of the taxable items listed in the law. Some of these are clearly tangible, such as greeting cards, helmets, and books, while some, like telecommunications, are a bit less black and white. There are also examples here on the screen that are not specifically in the law, but they help to illustrate what kinds of items constitute tangible personal property. And you can see how wide-ranging these items are. If you buy any of these or similar items in Pennsylvania or have them delivered into Pennsylvania, they are taxable tangible personal property. A more complete listing is available in the REV 717. Okay, so there are certain items of which tax is excluded per the sales tax law. The exclusions included the following: wrapping materials that are needed to deliver property, such as bubble wrap, pallets used to transport goods, shrink wrap, and so on. So anything wrapped with the package or used to deliver the package is considered exempt. Grocery store food, unless it is considered ready to eat, such as sandwiches from a deli, and clothing that is considered everyday wear. Everyday wear items are articles of clothing that are not required as a condition of your employment, like a uniform, or considered to be your regular clothes. These everyday wear items are not subject to tax. Caskets that the funeral director uses in conjunction with the funeral services are exempt from both sales and use tax. Regular unflavored water, including mineral waters, are also exempt. And then we have sales for resale. This is a big one for many businesses. Industries like department stores, grocery stores, automobile dealers, etc., are in the business of buying goods and reselling the same goods. In Pennsylvania, if the inventory or goods that you are buying is for resale, you're not required to pay sales tax, given that you will charge the tax to the end customer. Sales tax is also imposed on services done to tangible personal property. Basically, the rule is if the item that needs serviced is taxable, then that service itself is also taxable. For example, if my watch breaks and I take it to a jeweler to have it repaired, that transaction is subject to sales tax. Since watches are subject to sales tax, or AKA taxable, then the repair service needed to fix my watch is also subject to sales tax. So this slide shows some other examples of services that are taxable, which may help you better understand this concept. Please take note of the first item, wrapping and packaging tangible personal property. Now, I know I just said using wrapping materials as an example of an exempt item. This is considered taxable when we are not mentioning it being used specifically by the seller to wrap or package items for delivery. So the example on this slide is referring to the service of wrapping tangible personal property, such as gift wrapping. Okay. Enumerated services are those services specifically taxed. These are not tied to tangible personal property, but are specifically identified for taxation by legislation. These can get very involved, and some have special rules on how to determine taxability. All of these items are specifically outlined in the REV 717 that I mentioned earlier. So we do recommend you check that out if you are providing any of these services. So now you know what sales tax is and some example of items and services where sales tax is applicable. Let's dive into who should be collecting Pennsylvania sales tax. The Tax Reform Code states every person who maintains a place of business in the Commonwealth to sell tangible personal property or to perform taxable services is required to be licensed for and to collect sales tax from its customers. In other words, the law requires Pennsylvania businesses to collect the tax from the customer at the time of the sale. What it means to maintain a place of business has changed over the last several years. For an entity to have physical presence, it means exactly that. To fall under this category, a business must have taxable sales and has some type of physical location, like an office, a place of business, an employee, store inventory, rent or lease property, tangible goods, or they make deliveries into Pennsylvania, to a Pennsylvania address. Meeting these qualifiers for physical presence means the business would be maintaining a place of business in this Commonwealth. This is going to apply to most of you. For the majority of you attending today, will have a physical presence in Pennsylvania. So let's quickly just revisit bullet point 3 here, goods or inventory in a warehouse. Under Pennsylvania law, inventory stored in a warehouse, a fulfillment center, or any other location within Pennsylvania does create a physical presence within our Commonwealth. This means that retailers who have inventory stored within Pennsylvania are required to register to collect and remit Pennsylvania sales tax on any sale made by the retailer directly to Pennsylvania customers. We are highlighting this one because many people who sell online are not aware of this. Even if you're selling through a marketplace facilitator and the goods are stored in one of their warehouses, but the end customer is a Pennsylvania resident, you have a physical presence in the state. Speaking of online sales, this is the perfect way to transition into economic presence. So even though an entity might not have a physical presence in Pennsylvania, they might have what's called economic presence. The Tax Reform Code defines maintaining a place of business within the Commonwealth to include having any contact within this Commonwealth, which would allow the Commonwealth to require a person to collect and remit under the Constitution of the United States. This statement is referring to economic presence. So if a business makes $100,000 or more in annual PA gross sales, then that business would be considered to have economic presence and they must collect and remit Pennsylvania sales tax. In 2018, the Wayfair versus South Dakota decision opened up the legal door to expand the concept of nexus beyond mere physical presence. In the Wayfair decision, the Supreme Court ruled that as long as the state had a uniform tax rate, did not apply the new tax retroactively, and provided some sort of administrative assistance in making tax determinations and filings, economic presence is an acceptable standard in making businesses collect sales tax. So the effort is to level the playing field for all businesses. So in short, we are talking about here is out-of-state businesses that sell to Pennsylvania customers and establish consistency in the requirements to collect and remit sales tax. Previously, when Nexus was determined solely by physical presence, these businesses would have a huge advantage over Pennsylvania brick and mortar locations as they were not held responsible for the collection and remittance. With the new law, out-of-state businesses are now treated similarly to PA businesses locations if they make over the $100,000 in gross sales into Pennsylvania annually. I know I use the word nexus a lot here, so let's quickly discuss what that means. So nexus is when a business has either a physical or an economic presence within Pennsylvania. Sales tax nexus is just a fancy way of saying a significant presence in the state. If a business is considered to have nexus in Pennsylvania by having either physical or economic presence, then they must collect sales tax on all taxable sales to Pennsylvania customers. Okay. So now that we know who needs to collect sales tax, let's discuss how to go about registering for a sales tax license. So in order to collect sales tax, you must have a license issued by the Pennsylvania Department of Revenue. The license performs many functions, including demonstrating to the public that a business is dutifully licensed agent to collect sales tax on behalf of the Commonwealth. It should be notated that if a business has collected sales tax without the proper license, they should coordinate with the Commonwealth to remit the money immediately, which means 30 days within collecting it. So to register and obtain a license, you will need to complete the Pennsylvania Online Business Tax Registration application. If you have no pre-existing business tax account, you will use the business registration hyperlink on the MyPath homepage without logging into your profile. If you do have pre-existing business accounts and just simply need to add a sales tax license, you would log into your profile and use the business registration hyperlink. The reason for this is that by going through your logged in profile, you won't need to refill in your business information for the application. Please be aware that citations are issued for operating a business without a valid sales tax license. Under Pennsylvania law, sales tax monies collected by a business on behalf of the Commonwealth are defined as trust fund money. The money does not belong to the business. It belongs to the Commonwealth. It must be handled accordingly to the law and to the department regulations. A business must meet the timely reporting and filing requirements. Proper handling of trust fund money helps secure the success of the business by avoiding costly penalties. If you are entirely new business to Pennsylvania, we do recommend that you do visit the business.pa.gov for all of your registration needs. This is a one-stop shop website established to help new businesses get up and running beyond just setting up their tax accounts. Okay. So now that you've signed up for your sales tax license and are ready to make some sales, you will need to know how to collect and remit the tax to the department. So of course, the first step to collecting sales tax is knowing the amount that needs to be collected. As mentioned previously, sales tax is 6% of the total purchase price, including warranties. Which do represent prepaid taxable services to taxable tangible personal property, delivery and other services. An example of another type of service that would be included in the purchase price would be the charge for car detailing included with the purchase of an automobile. When it comes to deductions, the basic rule is any cost a business incurs in selling a taxable good or service when passed onto the purchaser is considered to be a part of the taxable purchase. For example, if you would look at your phone bill, it may list a line item called universal service. This is a charge that telecommunication providers may add to your bill to recover their cost of federally mandated contributions to the universal fund. It is a cost of doing business for them, and they may elect whether to bill their customers for this. So amounts representing on-the-spot cash discounts, employee discounts, volume discounts, store discounts, such as at buy one, get one free. Wholesalers or trade discounts, and then of course, store and manufacturer coupons shall establish a new purchase price if both the item and the coupon are described on the invoice or cash register tape. In a recent court case, Myers versus Commonwealth, affected how general discounts are handled. The court found the regulation does not require the coupon related to a particular taxable item in order to reduce the purchase. Only the item and coupon be described on the receipt or invoice. As the court noted, if all items on the invoice or receipt are subject to tax, then it is reasonable to determine the coupon applies to the taxable items and the purchase price may be reduced. Conversely, when all items are not taxable and the coupon did not identify to a taxable item, the description is inadequate and the amount of the coupon cannot reduce the purchase price. To put it simply, in order to reduce the taxable purchase price, the receipt must identify what products the discount applies to, or all items on the receipt must be taxable. So for example, let's say I buy 2 hamburgers, which are $2 a piece, and use a BOGO burger coupon. My initial total is $4 until the cashier enters in a $2 credit for one of my burgers, which is reflected on the receipt as a BOGO sale. Since both items listed on the receipt are taxable, this general discount is accepted and reduces my purchase price from $4 to $2, which would make my sales tax 12 cents. Another example is, let's say I'm purchasing the same 2 taxable burgers plus a non-taxable water with the BOGO burger coupon. When the cashier enters the credit for the burger, the receipt must identify which specific item the discount is being applied to, which in this case is one of the $2 burgers. The discount must be specific in this scenario because there are both taxable and non-taxable items on the receipt. If a general BOGO discount is reflected, then the purchase price would not be reduced when calculating the amount of sales tax, and I would owe the full 24 cents. So if the coupon lists a specific item and the receipt has both taxable and non-taxable items, or if it is just a general coupon just showing a percentage off of the total, but all items purchased are taxable, then the discount is taken before sales tax is applied. Otherwise, the discount is applied after sales tax is applied. Okay. So sales tax returns and payments must be filed electronically. There are a few methods in which you can do this. We have online, over the phone, and using a third-party vendor. We do strongly encourage you to use our online MyPath profile to file and pay your sales tax amounts. Not only are you able to file and pay for the current year, but you are also able to view previously filed returns, access notices that have been issued both by Path and eTides, request statement of accounts that are available immediately after you submit the request. You can also send messages to the department and more. Another very important function is that you can grant permission to others like your CPA or bookkeepers to also view information regarding your returns. You can access the MyPath portal at www.mypath.pa.gov or simply visit the revenue.pa.gov and click on the icon that says MyPath right on the homepage. Please note that you must create an account to be able to utilize this service. And the department has third-party vendors who will provide e-filing software for those taxpayers who do not wish to use the department's e-filing options. A list of approved software vendors is available on the department's website at www.revenue.pa.gov. Some important things to remember is that the PA3 forms are not available for download from the internet, and the use of other tax forms could result in a non-filer notification and or the misapplication of a tax payment. 2, per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfer, also known as EFT. Failure to comply with the electronic funds transfer remittance requirements may result in an assessment of penalty equal to 3% of the total tax due, but not to exceed $500. The penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So if every quarter you send us a check of over $1,000, you are going to get hit with the EFT penalty each quarter. So when you initially register for a sales tax license, your filing frequency is automatically set as quarterly. Near the end of every year, the Department of Revenue reviews the average of the current year's first and second quarter, as well as the prior year third and fourth quarter sales to determine if your filing frequency needs adjusted. So we have semi-annual filers, those who have an actual tax liability of $300 or less annually. Semi-annual returns are due August 20th for the January to June period, and then February 20th for the July through December period. Quarterly filers are those with an actual tax liability that's less than $600 per quarter, but greater than $300 annually. Quarterly returns are due the 20th day of the month following the end of each quarter. So that would mean April, July, October, and January 20th. Lastly, we do have monthly filers. These are actual tax liabilities is less than $25,000, but greater than the $600 per quarter. Monthly returns are due the 20th day of the month following the end of each calendar month. So this is a lot of information being thrown at you, but thankfully the department puts out a yearly due date calendar. This is called the REV 819, which is broken down by frequency and to help you remember when your filing due dates are. You may find this form on the revenue website. If your actual tax liability is $25,000 or more per quarter, you may be required to remit what we call accelerated sales tax prepayments. These are basically advanced tax payments made for those who have a high tax liability for the year. We will have more information available on the accelerated sales tax prepayments in the future, but we have found that typically this is not something a new business needs to be concerned with right away. So the Department of Revenue offers vendors discounts for timely filed returns and payments. The discount is limited to a flat rate depending on your filing frequency, or 1% of the tax collected. So whichever is the lesser of the two. If you collect sales tax on an item that you've previously paid sales tax on, you can claim a credit for the sales tax paid when you originally purchased the item. So for example, Ted owns an aluminum siding company, which makes half of its revenue in retail sales and the other half in contract work. He enters a construction contract to install 1,000 square feet of aluminum siding on customer A's house. Ted purchases the 1,000 square foot of aluminum siding at $3 per square foot. He correctly pays the $180 sales tax on the $3,000 purchase price because he anticipates that he will be the ultimate consumer of the siding. Before the contract is performed, Ted decides to sell the aluminum siding at retail for $5 per square foot to customer B. At the time of the sale, he properly collects the $300 sales tax from the purchaser who bought the aluminum for $5,000. So in reporting the $300 tax, which he has collected from customer B, Ted is permitted to claim a credit of $180 for the sales tax, which he had previously paid on this item. This is called the tax paid purchase resold credit, or the TPPR credit. This credit shall be taken within 3 years of the original payment of tax on the item which has been sold. It is very important to remember that this credit is not for those items that are purchased with the intent to resale. We will talk about exemption certificates in a little, which will cover those scenarios. So let's just recap some general rules that we just went over. So filing and remittance occurs at different intervals determined by the department. You can either be monthly, quarterly, or semi-annual filers, depending on the size or sales volumes of your business. First-time filers will always be set up as quarterly until the department has a chance to review your sales activity to determine if the frequency needs adjusted. The due dates will always be the 20th of the month, following the last day of the reporting period. Again, Form REV 819, which is available on our website, is there to help you remember when your due dates are based on your designated filing frequency. Local and state sales tax are filed together on one report. One thing that a lot of people are not aware of, but it is very important, is that even if you have no sales for a certain period, you are still required to file a zero return. Think of it as an informational return, letting the department know you had no sales for that period. You must do this in order to stay compliant with the department. No discounts is granted on returns filed late. Penalty and interest will be added to late filings as well as late payments. Interest for any late payment of tax, interest is calculated on a daily basis. It is calculated by taking the amount of tax due and multiplying it by the number of days past the original due date, and then by the daily interest rate. The annual interest rates varies by year, so you will want to use the REV 1611 to find out more information regarding how this is calculated. We will talk about this in a little more later in the presentation. Penalties, the penalty for past due filings of a sales tax return is 5% per month from the date due until the date filed, but it will not exceed 25%. If an underpayment penalty is warranted, it is imposed at a rate of 3% a month on the unpaid tax balance from the date filed to the date paid. And again, not to exceed 18%. And note, if the proper tax, interest, and additions are not remitted, the department will make an assessment. So the next area we will talk about is exemptions. Unlike exclusions, which are usually items never subject to sales tax, an exemption is situational and dependent on who purchases the item and how the item is used. Pennsylvania law allows businesses to claim an exemption from sales tax for several different reasons. The exemptions are centered on certain business processes, and their taxability depends on who bought the item and how it is used. To claim an exemption from sales tax, you must complete the REV 1220 and disclose a valid basis for the exemption. Keep in mind, the purchase must be consistent with the exemption reason being claimed. This form must be filled out to completion. You must select if the exemption is to be used for one or multiple transactions, fill in the name and address for both seller and purchaser, and select the exemption being claimed. Additionally, the burden of proof falls on the shoulders of the person claiming the exemption. You must supply supporting documentation when appropriate to support your exemption claim. If the form is missing any of this information or the purchaser's signature, the seller does have the right to reject the exemption certificate and charge tax, as it will be considered incomplete. So let's go over some reasons that you might claim an exemption in Pennsylvania. So the first reason you may qualify for an exemption is if you are an exempt entity, such as a government organization or a qualified nonprofit. Items purchased by state and federal agencies, as well as PA school districts, are exempt from sales tax in most cases. Catholic and private schools will receive a 76 number from a 76 number to claim an exemption. Regarding construction contracts, the exemption is limited to the building, machinery, and equipment, and not the governmental organization. For nonprofit organizations or institutes of purely public charities, there is a limited exemption on purchases. An example of institutes of purely public charities include not-for-profit hospitals, volunteer fire companies, and churches. Organizations that qualify under this category are given a 75 sales tax number by the department. And when we say limited exemptions, what we mean that there are certain requirements that must be met to consider the purchase exempt. The items or services purchased by these entities must be directly used in the charitable purpose. So for example, let's say a church purchases a lawnmower to use for maintenance of their property. They will need to pay sales tax on the purchase because the lawnmower is not directly used in their charitable purpose. Additionally, all exempt items must be purchased in the name of and from funds of the exempt organization. Please note that if you have 501c3 status with the IRS, you do not automatically qualify for this exemption. You must file an application, the REV 72, with the department to determine your state exemption eligibility. If you are a business operating in a Keystone Opportunity Zone or an strategic improvement zone or simply designated state economic zone, you are given a sales tax exemption on goods and services used exclusively in the zone. Purchases made for items or services by the business outside of those areas will need to include sales tax. Businesses qualifying for this exemption will receive a 72 number from the Department of Community and Economic Development. Okay. So next, you will want to consider how the item is being used. If an item is being used directly and predominantly by a business, in an exempt business process, it will qualify for an exemption as well. Exempt business processes include manufacturing, mining, dairying, farming, shipbuilding, and timbering. Direct and predominant use means that the item is used directly in the exempt business process over 50% of the time. So for example, a manufacturing entity purchases a forklift that is used in pre-production activities like moving raw materials, production activities like moving work and process from one workstation to another, and post-production activities like loading finishing goods into a truck. For the forklift to be exempt from sales tax, it must be used over 50% of the time in these production activities. If it is used more than 50% of the time in activities that are not considered a part of the actual manufacturing process, then there is no exemption. And finally, if you are buying goods and services for resale, you can complete the REV 1220 to receive an exemption on the item upon your initial purchase, since you will be collecting the tax from your customer. Most of the time, this applies to retailers or wholesalers who purchase items for the sole purpose of resale. If you are deemed a retailer or wholesaler, you will be issued an 8-digit number by the Department of Revenue. So for an example, I own a car repair shop and I'm working on a car for a customer that needs a new part. I order the part from a place like Napa, and the part is being resold to the owner of the car once it's installed. So since I'm purchasing the part for the sole purpose of reselling to my customer, I would supply the REV 1220 to Napa, so I would not pay the sales tax at the time of my purchase. So we did earlier talk about the tax paid, purchase resold, or the TPPR credit. That credit is claimed by those businesses who are buying items without intent to resell and later end up doing so. Unless, of course, you are in an industry specifically identified in the law, such as barbers and beauticians. The difference between this and the TPPR credit is that in this scenario, I am not using the part for use in my shop. Therefore, I should not be paying the tax upfront, as I am intending to collect it from my customer. As a side note, barbers and beauticians are required to pay sales tax on all purchased of equipment, materials, or supplies, regardless whether the property is purchased for use in performance of service or for resale. If you fall in this category, you must pay the sales tax and claim the tax paid, purchase resold credit on your sales tax return. All right. So when a seller does not charge Pennsylvania sales tax on a taxable item to a Pennsylvania purchaser for any reason other than a valid exemption, it then becomes the responsibility of the purchaser to pay the tax directly to the Commonwealth. This is called use tax. Use tax is the counterpart to sales tax. In these situations, most likely occur when the seller has no nexus in our state. As we stated, use tax is sales tax not collected by the vendor or seller at the time of purchase and is the responsibility of the consumer. Examples of when use tax is due is if your business makes purchases of taxable items over the internet through toll-free numbers, from mail order catalogs, or from out-of-state locations that are not charging PA sales tax. You, as the purchaser located in Pennsylvania, must essentially make a payment to cover the amount of sales tax that should have been included when your total at the time of purchase. This is the purpose of use tax. The tax rate is the same as the sales tax, 6%. plus 1% local tax for items purchased, delivered to, or used in Allegheny, or 2% local tax in Philadelphia. Many businesses believe they save money by making tax-free purchases from out-of-state vendors, unaware that these transactions are often assessed upon audit by the department. Since assessments include interest and penalties on top of tax, businesses in these situations have increased operational cost by not voluntarily addressing use tax obligations. As we just stated, use tax is sales tax not collected by the vendor or seller at the time of purchase and is when the responsibility of the consumer. What's that? Oh, oops. So businesses are registered for sales tax, may remit use tax as a part of their sales tax return. If you are familiar with the return, this would go on line 6. Businesses with ongoing use tax liabilities who are not registered for sales tax should apply to the department for a sales and use tax account through the bypass system, which we did discuss earlier. Businesses with infrequent use tax liabilities may use the department's online use tax payment option right from the MyPath homepage, which again is a non-logged in function. Individuals or sole proprietorships may also use line 25 of their PA 40 to pay use tax. Sales tax is one of the most, if not the most, complicated tax for taxpayers to deal with. I know we've thrown a lot of information at you today, but about an already very nuisance topic. Let's discuss some resources that you can refer to, which are available on our website. Majority of these will be the same resources that, I'm sorry, I skipped a section. We mentioned this one a few times throughout the presentation. The REV 717, the Retailer's Information Booklet, is a great guide for determining goods and services subject to sales tax. It also provides some information on some of the other topics we discussed here today, as well as topics like petitions for assessments, construction contracts, motor vehicle lease tax rates, and more. The REV 588, Starting a Business in Pennsylvania, a guide to Pennsylvania taxes. This is a fantastic resource that touches on all the basics for a new business owner. This guide includes information for sales tax, as well as registration, employer withholding tax, and other items that go into owning and operating a compliant Pennsylvania business. The REV 819, which we talked about when discussing due dates, is the schedule put out each year that breaks down filing and payment due dates by filing frequency. The 2023 schedule is published and available under forms for business, sales use, and hotel occupancy tax forms. You can also search the form number on our website. So again, this schedule outlines all of the period end dates and due dates, even provides more information on the accelerated sales tax prepayments. The REV 1611 is the form used to calculate the interest on all taxes due after January 1st, 1982. Earlier, we mentioned that interest is calculated on a daily basis. It is calculated by taking the amount of tax due and multiplying it by the number of days past the original due date, and then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate for any given year is established by the U.S. Treasury Secretary and is effective on January 1st of each year. For 2023, the rate is 7% annually, or 0.000192% per day. We do strongly encourage all of our customers to use our online customer service center. To do this, you can visit the URL listed on the screen and click the customer service icon directly on our homepage. Here you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure the information you are receiving is accurate and relevant. If you are unable to find the answer to your question through the FAQs or general website resources, you also have the option to submit a question to the department. This feature allows users to submit either a general taxability question or a more pointed question regarding a scenario to a trained representative who specializes in sales tax. We will review your submission and respond within 72 business hours in a process that is similar to receiving an email. Okay. Least we forget the Customer Experience Center call center. Here you will be able to speak to a representative skilled in whichever tax type you pick from the menu prompt. Our business hours are Monday through Friday, 8 a.m. to 5 p.m. If waiting on hold is not something you enjoy, we do have a scheduled callback feature on our website. You would simply select the option, enter your name, phone number, tax type that you're calling in regards, and select the date and time. And one of our representatives trained in that tax would call you back close to your selected time. We do ask that you please allow a few minutes from your scheduled call time. We do our best to maintain the schedule, but this can vary slightly depending on volume of request. So again, we are closed on the weekends, federal holidays, so you will not be able to schedule callbacks during those times. All right, so that wraps up this session today. Hopefully it was informative and helpful. But I do want to open up if anybody does have any questions.
Okay, Rebecca did post in the Q&A about getting a copy of today's presentation. And just as a reminder, I will be sending the slides that you've seen, as well as a recording. And then we also have a quick survey that I will be asking you to take. And then I actually have a poll here that I'm going to launch just for one question feedback for immediate feedback. If you guys could please do that, that would be great.
Cindy, do you mind if I mention something I saw asked many times in the Q&A real quick?
Oh, please go right ahead, Alicia.
Okay, so it looks like there's a lot of people who are asking if they still have to file returns even if there are no sales during a certain period. So your filing frequency could vary depending on your volume of sales, so that's unique to you. But you do have to file a return anytime you have an active sales tax license. So if you did not have any sales during that period, you would be expected to file a zero return in order for everything to show in compliance as far as the Department of Revenue is concerned. So hopefully that makes sense to everyone, because we had a lot of people ask that question.
Great. Was there anything else that you saw that you wanted to expand upon with the questions, Alicia?
I think our folks did a pretty good job at answering everybody's questions. A lot of them were unique in the sense that I don't think we need to talk about them right here. But if anybody has additional questions, please let us know and we'll get back to you with answers on them.
Okay. And I just want to say thanks to Rachel. She posted a couple of links to the publications that Stephanie mentioned. And so I'll try to also send those links in my follow-up email, which probably won't be until either late today or first thing tomorrow morning. It takes a little bit of time to get the recording completed and wrapped up. I really don't want to end today's webinar with some outstanding questions, but to the team here, if you guys would like to answer something live, that would be great. It's up to you guys. It looks like Diana is answering Nikki. As well, if anybody has questions, again, there is the Customer Experience Center that they can reach out to, and that is noted in the PowerPoint. I know I've had, I've used the Customer Experience Center. I've had a number of my consultants and clients use it as well. And I think the aspect of actually setting an appointment for a callback has been very helpful, especially when you don't know how soon a call will be answered. So to the team there at the Department of Revenue, thank you for setting that aspect up on your website. That's great. All right. So as a reminder, I am going to be sending out an evaluation form beyond that poll. We want to hear from you. So I guess a couple of things that I will prompt you on is if you could give us feedback, of course, on today's content and delivery, that would be great. In addition, if you're looking for training on other topics or even other topics that the Department of Revenue could present on, we're looking for that kind of feedback. We do look through your comments very thoroughly. So always looking for how we can present the information that's most needed by all of you all of the business owners here. So, all right. Well, I'm going to stop the recording and